Yeah, I know. Silver, silver. Everybody's got silver on their mind. When you're heavily invested in silver, it becomes like a cancerous growth coming out of your head. You want to know what's going to go on with it today, what's going to go on with tomorrow, what's happening next week, when should I sell, when should I buy more, and all this kind of garbage. So it becomes like an obsession and a cancerous tumor on your brain all the time. So, um, what's going on right now with the markets again is that the euro, like as always, I've been maintaining. I don't think it's going to fall apart as people think, or I'm not even sure if countries are going to exit the euro. I know there's been a lot of drama about, Spain's yields going up a lot, the Spanish bonds yields going up a lot, but I think that a lot of this stuff is going to be resolved with other policies that they have out there up their sleeve. And in short, what's going on with the euro is all this crisis is producing a desired change, which is more political unification and more fiscal unification of Europe in general. That's the desired goals of the elite. You might have a lot of independent people coming up and talking about, oh, we need to exit the euro, and all these politicians talking about it, and maybe they'll have a lot of popular support, but I don't think that's going to fly. The elite are very shrewd. Now, if you just storm the castles and stuff like that, you probably could change the policy, but I don't know if that's going to happen or not. Who knows? But as far as what's going on in Europe, the ECB, the European Central Bank, is going to commit to greater purchases of sovereign debt. Basically, this has been a recommendation. It's been a recommendation by the Council on Foreign Relations. It's been a more of a recent recommendation, even by George Soros. Even he talked about the also even putting all the bonds together into one European-wide bond, an all-encompassing bond, and selling that on the open market versus individual countries selling their bonds. I know Germany doesn't like that, but the other side of it they're trying to do is they're saying stronger countries such as Germany. This is another thing that was right out of the Foreign Affairs and Council on Foreign Relations, also recent recommendations by think tanks in Europe. Stronger countries such as Germany with fiscal surpluses will prop up weaker countries. They're forcing everybody together, and it's very unpopular. Now, also in the case of Greece, I don't even think they're going to exit the euro. I'm beginning to suspect that they're not. I always kind of suspected that they wouldn't for this reason, is because their symbology. They're the cradle of European civilization, and this was put together by some think tanks that want to have a united Europe. Also, euro is a Greek word. It's kind of symbolic of what it is too. But what they're going to do is screw over the Greek people. Like Greece will survive, but they're trying to screw over the Greek people. So, the IMF was talking about working with Greece very recently. Like last week, they're talking about working with Greece, providing more funds and the type of stuff. So, I think the Greek euro is going to hold together, but it's very hard to judge what's going to happen on a day-to-day basis. If you can know ahead of time what drama is going to come out, you can do extremely well in the markets. But overall, Europe is going to hold together. It's just going to be forced to be more centralized politically and fiscally. That's the game that's going on in short. It's not going to all fall apart. I know they say that it is. Some people say that the United States currency is going to fall apart, the European currency is going to fall apart. I don't know. In the short term, definitely not. Definitely not this year. I know that. So the other thing is that's coming up. Now, I know gold, silver, platinum, and palladium went up a little bit today. I think that's just a bounce off of yesterday. The other thing that's coming up is on about August 2nd, 2012, which is next Thursday. Today is July 25th, 2012, Wednesday. The federal government will run out of its ability to borrow and which will cause more budget confrontations and spending confrontations between the Democrats and Republicans. Now, the spiel is they want to just raise the debt ceiling right off the bat. That's the thing. You see a lot of articles out right now stating that last year's arguments and delays and all this type of stuff cost the government $1.3 billion. I don't know where the hell they come up with that number from. In other words, they're probably just saying this because they don't want any confrontations with the budgets coming up this time, which are coming up, right around the corner, meaning days. And for raising the debt ceiling, that is, for raising the debt ceiling. and they don't want any confrontations. Now, I think so. They're bringing up the issue that it cost the government $1.3 billion doing all stalling last year. I don't know if that's true or not, but what I see coming up is that we're going to have a lot of confrontation because it's a election year. And what's that mean? You know, you might not see a devaluation of the debt, downgraded the debt again, unless they really screw up. But what you might see, what this makes a lot of common sense, is people may be getting out of the dollar losing some of its strength, because these kind of headlines will keep people from fleeing into the dollar. If they see, like, you know, they're still at an impasse for raising the ceiling, the debt ceiling, and stuff like that. They have to the such and such date until the U.S. will default. You know, and those kind of headlines really scared the crap out of the markets last year and caused gold to go way the hell up. You know, I kind of expect the same damn thing. And I also expect when they have the fiscal budgets coming up here at the end of September and into October, more of the same kind of garbage going on. And that's going to be very bullish for gold and also silver. So, you know, that's something to think about. So that's why the metals are probably going to go up with or without QE right there. Now, as far as QE going on, we already got QE going on in China, right? I mean, it's already going on. And, you know, as far as the engine that really drives up commodity prices, it's China. What you need is more QE going on in Europe, but it looks like that might be coming about. It might be coming about. I think they're going to move. They're going to keep up the austerity, but they're also going to do some easing too. You know, if you look at the figures from France and Germany, the two big powerhouses of industry in Europe, they're actually below 50 on the PMI. They're like 47, 48. They're low. They're low. They're in shrinkage. They're contraction. China, officially they're at 50 on the PMI, the manufacturing index, but Hong Kong Shanghai Bank has them at 48, so they're in contraction. So, you know what? The only answer is, I know like it got a lot worse than 2008, but China already is going to be doing easy. They already are doing easy, and they're not going to be buying U.S. debt. So what they're doing actually, when they're buying dollars, China's buying dollars, they're buying them from other countries, not the U.S. They're buying other countries, U.S. treasuries that are held in other countries, and they're giving them Chinese money in exchange. You know, China doesn't want their investment in U.S. treasuries to go to kablooey. That's one reason you're not going to see the dollar fall right away. But they're moving in a very shrewd manner, and what they're moving into is gold, because they're going to back up their currency with gold. They bought over 400 tons of gold in the last couple of weeks, and they want to eventually establish their currency as one of the part of the world reserve currencies. So, you know, just as the U.S. dollar is and the euro is, it's going to be next. It's going to be the Chinese yuan. So, you know, the underlying asset though they're going to use is gold. So, any investor that has a little bit of brains, which I'm sure they do, they have plenty of brains. A lot of people are moving into the dollar very recently, maybe in the last several months, because it did climb from 70-something index over to, you know, 83 index today. But it looks like with this thing coming up, the budget ceiling, the deficit, having to raise the spending ceiling, the debt ceiling, it's going to put some pressure on the dollar, and that's probably going to bring it down. So where are they going to run to? Where are they going to run to? It's probably not the equities, because the equities look like, you know, if you're looking at the S&P and everything like that, it looks like there's a lot of signs out there, like they have the death cross coming up at the 50-day moving average, crossing over the 200-day moving average, and a couple other things that look like, you know, bear flags and everything that are coming up. So, you know, the more smart, astute investors probably are not going to be dumping into equities from the dollar, and they're not going into the bonds or anything like that. I mean, they're not going into like Spanish bonds or anything like that. So I'd imagine, you know, you might see a pretty hard spring in the metals coming up pretty soon. That's why I'm looking at this. I mean, even without QE coming up, even without QE. But I suspect also that the American numbers, that are, for the manufacturing index are cooked. They're cooking the books. That's what I think. And actually, I kind of wonder what the hell is in those numbers, because when they're saying the manufacturing index is such, what is in there? Is it a bunch of stuff from the pharmaceutical companies? I mean, that doesn't contribute too much to the economy in any real fashion. And or is it something that's, construction, manufacturing, bridge building, and that type of stuff, or agriculture or whatever. And I should also interject here. It's very interesting, what the next numbers are going to be, because I'm not sure what's in the PMI itself, but we know agriculture has gotten slammed because of the drought situation. And in the long term, what's going to happen is, right now you're looking at corn and soy is way the hell up. You might see in a very, very short term livestock go down, because what they're doing is they're killing off the livestock because they know they're not going to be able to feed it later. It's going to be too expensive. So that brings more livestock to the market. But later on, there's going to be a shortage of livestock too. That's going to hit. So all these prices for food across the board are going to go way the hell up. That does not bode well for the American economy and discretionary spending and all this type of stuff. So I'd have to estimate, even without QE, that gold and silver are going to start taking off. Now, I think QE is coming up anyway. And in effect, we got to really look at is global QE, and China's QE is helping the metals too. So I don't think silver's going to go down to some crazy numbers like some people are thinking. If it does, it's going to be a fast dip. If I saw silver drop below 20, I'd be buying triple leverage. I really would be, because I don't think it's going to stay flat. That would be my opinion on that. So anyway, if you got silver on the brain, and you got cancerous tumors of silver coming out of your brain because it's always on your mind, you want to know what's going to go on with it, I could probably give you some good common sense advice on this. Now, I still would recommend, at the current price levels, if people weren't into silver right now, you'd be smart to dump a significant amount of money into it. Not just to spike the system, but you'd be smart to do that. Anyway, that's all I got to say. You're going to win out on this thing, but I would not try to judge a further pullback. I'm going to hit cash reserves into it if I see it drop even further, but it's not going to be physical. It's going to be on leverage with the intention of going into a quick gain. But I'm not sure if it's going to pull back that far.